Hi, you guys. I'm Phil Town from Rule One Investing, and today I'm going to tell you about how investing helps the economy and the companies that we invest in. So the recent market downturn has brought a lot of turbulence with it, from just gigantic layoffs in all kinds of industries, 30 million people unemployed, businesses having to close during the quarantines. And at the same time, you probably heard me say that the stock market crash, and what I think may be a secondary crash that's coming, is likely to create an enormous opportunities for investors to buy incredible companies that are on sale. And that's kind of what I want to talk a little bit about, because I don't want to seem insensitive that there's a lot of people who are going through tremendous hardships right now. But you got to understand that investing the way we do it can enable anyone to have a much, much better life in the future, a much better retirement for you and your family. If you can follow what Warren Buffett and Charlie Munger have been teaching us for 50 or 60 years, you've got an opportunity to take part in a kind of a game where a high IQ isn't how you win. It's you follow a few simple rules of investing that these people have laid out that have been working now for 90 years. They worked through the last Great Depression fabulously well for Ben Graham, who started all this, and then through through world wars, through you name it. And this technique of investing, these strategies of investing that we call Rule One, are fabulous, and they have resulted in many, many people doing very, very well. So I don't want you to feel like I'm being insensitive, but at the same time, what I want to say is when we have these huge events like this, these giant economic market crashes, they are the best opportunity in the world for you to just change your life financially. So that's kind of one aspect of this. The other aspect is you can really do a lot here to make the world a better place. I don't know if you realize it, but that the money that gets invested in these companies does a lot to ensure that those companies are bigger and better down the road in 20 years. So where you put your money actually really matters. It's not just, we're going to go out and make a bunch of money with paper stock certificates. We're actually supporting real companies with real employees, with real missions, with real products that are out there in the world. And, from my point of view, we want to do that using our brain. We want to think about what we're putting our money into. So I think that we can really do a good job of making the world a better place if we start to realize that 85% of the money that's invested in the stock market is actually from people like you guys. It's just little guy money, like people like me, putting money into retirement accounts, putting money into insurance annuities, things like that. That money lands in the stock market. And of course, the people who are managing that money could care less about, necessarily any point of view. It's just that they're going to go out and try to make money with it. And what I'm going to encourage you guys to realize is that in an environment like this, where we're into what's potentially a big, deep recession or even potentially a depression, just putting your money in the market for the long run could be a 20-year error. You may have virtually no return over a 20-year period. On the other hand, and that's certainly what's happened before, right? So on the other hand, though, if you're able to go out and buy wonderful companies when they're on sale, those companies produce cash flow even through a depression. In 5 or 10 years, those companies are going to be worth a tremendous amount more than what you paid for them. So I think we need to think about this as in a couple different ways, as we are taking advantage of a really tragic set of circumstances by coming into this market. What are we doing that's actually good? Well, first off, there's a little bit of a mistake when people think about investing. Some people think that when you buy shares of a company, you're actually investing, you're actually getting that company the money. You're not. That company doesn't receive the money. The only time they get money from a public offering is when they initially offer their stock to the public, then they get that money. And then if they do a secondary offering, and then they get that money. So companies do that on a regular basis. But by and large, most of the money that's invested out there in the stock market is in a secondary market. It's just buying shares from an existing investor. They get your money, not the company. And then you now own the shares. And if you sell those shares down the road, the money doesn't go to the company, right? It goes to you. So that's a secondary market. But if you think about it, having your money supporting the price of a company in a secondary market is vital to that company. Even though they don't get the money, it's vital. Because why? Because they use their stock price in a lot of different ways. They look at the stock price and they say, we are worth this much money, $1 billion. And with that $1 billion of value established by you and me buying shares, even if they didn't get the money, they use that $1 billion value and they pay their employees stock options based on that value already being established and rising. If they give their employees a discount on the stock options, they know that they feel at least it's worth $1 billion. If they're getting it at 500 million, they've doubled their money immediately. They can use their stock price to buy other companies, and they do that all the time, issuing stock to the shareholders of the other company in exchange for owning that other business. They can also use the stock price to borrow. They can go to the bank and say, here, we pledge this stock value against this debt, and they can get money that way. And so this is a really important quality for a public company, is to support its stock price because of options, because of buybacks, because of takeovers. So when we vote with our money for a company, we are actually doing a lot to support the value of that company out in the real world. And that's why I want to urge you guys to vote your values. Don't just, have your money sitting in some index that might go nowhere for 20 years when you could take the advantage of, if this market goes down again in a big way, being able to step in and buy companies that you really love, things that are really magic to you. Maybe you love Tesla and it goes on sale. Maybe you love Amazon and it goes on sale. Maybe you love Google and you use it all the time and maybe it goes on sale. So you look for businesses that you are really invested in a personal way, right? Things you use, things you're passionate about. I mean, if you love RVs and you're traveling around the country right now, as many people are, hey, there's a couple of great RV companies out there that you might want to invest in if they're on sale. So being able to put your money where your values are is enormously important. And I want to add one more thing about that, and that is that the CEOs who run many companies are not, I don't want to say they're bad people. They're not bad people. They're just maybe a little greedy. And that greed can transfer itself into a lot of bad behavior, I think, on their part. They might be buying back shares of the company when the company's overvalued and wasting their shareholder capital, wasting their equity in the money. They might be, paying employees not even a living wage while they're taking home dozens of millions of dollars. We just want to see CEOs lead and inspire us, not be greedy bastards who just take everything they can get their hands on. And as far as I can tell, the only way to fix that, you can't legislate that. The only way you can fix it is to take your money out of that company. And that simply isn't going to happen unless you're controlling your capital. So I'd really like to see you think about investing as a moral enterprise that can make the world a better place. And one more aspect of that moral enterprise is that when we're sitting in cash and the market's dropping like a brick, when Warren Buffett is in cash for $130 billion, he is about to perform, and we are about to perform, and you are about to perform, if you do this, an enormous service to the economy and to these companies. And that is the willingness to buy when there's a lot of fear and people are getting out because they're afraid of losing their money. And if you're willing to step in with me and with Warren Buffett and other investors like this, investors we call Rule 1 investors, you not only will have the opportunity, I think, to make a really, really vast amount of wealth, I think, in the future, but also you are helping set the bottom price for the stock. And that means that company's stock, if enough rulers step in right there, see that it's on sale and buy it for the long run, we're helping establish the value of that business so that the loans don't get called and they don't get forced into bankruptcy, so that their options that they're giving their employees that are key employees will still have value for that key employee, so that they could go out and with shares acquire a company that's in much worse shape out in this market. So a company that we support just from having money in the secondary market could be vastly improved its situation by virtue of that capital that's out there. So we're doing an enormous thing here to jump into this market when it's going down. It's one of the most important things that people don't really realize. So I want to hear from you guys. Are you guys out there looking for wonderful businesses to invest in? And are you willing to buy them when there's fear in the market? So leave a comment below with your answer and I'll be sure to follow up with you. Hey, enjoyed it. Time to go play. See ya. All right, you guys, if you enjoyed this video and you feel it was valuable in teaching you more about how investing really helps this economy and helps companies, hit the like button and please share the video with your friends. And if you want more investing content, subscribe to my channel. And don't forget to click the button. There's a free gift right there. And thanks again for watching.